Hey there, it's Les Sulgrove with Simply Des Moines Market Values. It is August 24th, week 34 in Des Moines and the Central Iowa real estate market. Let's talk this week a little bit about some signs I saw this week. They're subtle, and I think we're seeing a little bit of a change in the market. It might be a coincidence. It might be because the Iowa State Fairs just ended this past weekend, but we'll have some more information on that next week because that's next week's show. But in the meantime, let's get started and see what's going on this past week. Are changes coming in the market? I'm starting to see some very subtle changes. And, the old metaphor, the dam could be breaking here soon. I hope that's the case. But we're certainly seeing some stuff set up so that that could happen. So let's jump in and see what these very subtle changes are and if they make sense to you, if the market's changing a bit. I don't know about you, but I've talked to several lenders and agents this past week, and they're all saying they've picked up business. So that's a good sign here. So looking at the dashboard first, we are up 304 listings, new listings this last week. 213 went under contract. Year over year for the new listings, that's down just a bit, but the going under contract is up 17%. So there's one of those initial signs. We've got more homes going under contract. That's good. Closed sales continue to stay ahead of last year at this pace. Year over year, we're at 8.2% increase in sales, so that's good as well. But basically what I want you to kind of focus on are three areas right here. Homes listed by the week, home offers accepted by the week, and then down here, mortgage rates. You can see that they've stayed even this past week. They were 6.58% last week, and they were that same rate the week before. So there was a lot of talk with the Federal Reserve. It sounds like interest rates for the Federal Reserve are going to be coming down here sometime, a couple of cuts in September, and that's making the mortgage-backed securities and the investors for those feel a little bit more confident. And so I think we're going to see a result of maybe positive news with the Fed is going to make interest rates maybe come down here in anticipation of that as we move into September. But we've still got about another week or so of August to get through. So let's see what I'm talking about here, where I'm seeing this little bit of a potential change. So first off, let's look at homes for sale overall. We have 4,180 homes currently on the market. Now that's a couple, about 25 or 30 fewer than we had last week, where we were over 4,200, but still above 4,100. That's really a good sign. You can kind of see, maybe it looks like we're starting to, peak here just a little bit. Let's take kind of a look here. These last 4 or 5 weeks, it's been pretty steady. And that's kind of what it looks like as well. If you look back to last year, later on in the year, it looks like we peaked last year around week 41, 42, and we may be peaking already this year. We typically see our inventory start to drop a bit as we get toward the end of the year. Now, if interest rates do drop and we get a surge of buyers, then all bets are off. We should still see some more increases here and maybe follow along. If we follow along the same path we saw last year, we would be able to see conceivably about another 500 homes. Really, if you think about it, by the looks of the graphics, or at least 400 more coming on the market, and could push us over that 4,500 mark. And that would be awesome. We haven't been there forever. So if we come up over 4,300, I'll start to show you back how long it's been since we've hit those 100 count milestones as we move forward here. As far as months of inventory, we're currently sitting at 3.9 months of inventory. And looking at the trending here, our spring market is typically lower. This year it was higher than the previous year, but we were around that 2.5% to 3% for most of the spring market. Once we got into summer, we've really kind of bumped over 3%. In fact, last week at week 33, we were exactly 4 months of inventory, which put us into a balanced market. And the trending we saw last year is really pretty much from next week. After next week's months of inventory, we saw the inventory levels put us into a a balanced market near around week 42, but we were hovering around there for the next 4 or 5 weeks before that. So we could be into a balanced market, and that's one of the things I'm kind of watching, because a balanced market gives home buyers a little bit more confidence because there's a little less competition out there. It's the right mix between homes for sale and home buyers. And when that happens, and if rates were to come down a bit, that would be a good mix. So that's another one of the subtle changes we're kind of watching. But let's look at home inventory, existing homes for sale based on the 4 subcategories. And this is kind of the theme this week. We're going to look at overall, and then we'll look at the subcategories so you can kind of see which segment of our market is really pushing ahead each week here. And of course, existing home sales, this is the one that creates probably 60-70% of our sales for the year, of all the sales types. 2,449, we have not hit 2,500 homes on the market in that particular category yet, but time's coming. I think we're still going to hit that. As you can see, the typical trending for existing homes is to peak again, just kind of like the overall homes, around that week 42. So we're only at week 34. We've got another 10 to 12 weeks before we should really expect that to peak. But what's kind of cool about this is if we look at where we are here, we're currently at 3.2 months of inventory, which puts us in a seller's market. And just to give you some idea of how long we've been in the seller's market, and this is pretty typical for the existing homes, not so much for the others we're going to show you in a second. Out of the 34 weeks we've been in the market, we've only been in a balanced market for 2 weeks out of those 34. So we have stayed in a seller's market for the bulk of our year, just 2 weeks in a balanced market, and have not been into a buyer's market. So if we can stay in the existing homes category in a seller's market, or even get up into a balanced market, that's going to bode well for a little bit of increase. So again, that's one of the subtle changes we're looking at. As far as existing condo townhomes, 3.8 months of inventory. So if you all recall, that means that if no new listings come on the market, that it would take just under 4 months to sell out of all the homes for sale. We have 458 came on this last week, and that puts us at a pretty good number, really, where we were there. So at 458, that's I'm sorry, it didn't come on last week. That's our total inventory level at 458 homes. And again, looking at where the balanced market and the seller's market was, we were 30 weeks into a seller's market and only 4 weeks into a balanced market. So again, if we can get into that balanced market, or stay in a seller's market as the market picks up, these 2 categories is where kind of the bulk of our sales come from, primarily from existing resale homes, but the existing condo townhomes also play a big part. Now, when we start to look at new construction, however, you'll see that our inventory level and the new construction levels are behind last year, and they've been pretty much behind ever since about week 11. And that's somewhat controlled by the builders. They can kind of decide how much inventory they want to release into the market. And they put us into a balanced market this past week at 6.3 months of inventory. So just over 6 months time before all the homes that are currently sitting on the market out there, if they were to sell, would run out. But we were only 15 weeks this year so far in a balanced market. No weeks were we in a seller's market, and 19 weeks we were in a market that favored the buyers. So if you're looking for new construction, this is probably the year for you to be looking, because we've been predominantly either in a balanced or a buyer's market for all of the year so far. And at 6.3 months of inventory, that means that there's probably plenty of opportunities out there, whether they are already started homes and they're under contract, or if they're proposed properties. There's probably some pretty good deals out there to be had. So don't overlook the new construction inventory as we move into the fall market. And then the last category here is new condo townhomes for sale. And we've been tracking pretty close to the same inventory levels that we saw last year, currently at 366 homes on the market. However, the pace of sales of the new condo townhomes this past year has been much slower. We've got over 10 months of inventory just this past week, sitting at 10.2 months. And we have not been in any other market than a buyer's market all year for condo townhomes. So again, we have probably a little bit extra inventory in the new construction condo townhome inventory levels. And if you think there's some deals to be had and you're looking for new construction and you don't really want to maintain that yard, this is probably the category you want to look at because prices are down a little bit and you can jump into a new construction condo or townhome pretty quickly because there's a lot of inventory out there waiting for you. Speaking of pricing, this is another one of the subtle changes, and this one's not so subtle. If you look that overall our median sale price, or I'm sorry, our median list price is currently this week it dropped down to $345,000. And a year ago, we were all the way up to 365. So that's a $20,000 drop in our median list price compared to last year. So if you were looking at homes overall last year, homes are more affordable because of pricing this year. Now, of course, the interest rates are up a little bit and they're playing some factors, but overall, that's a pretty good variance. In fact, we have not gotten into any of the price points over week that we were in last year. We typically do see our median list prices come down. Again, that's around week 39 or 40, but we're already seeing that happen here back at week 32. So how low our price is going to end up going, I think we're seeing a lot of sellers coming on the market and or making those price reductions to encourage those home buyers, and that's where we're seeing this median list price come downward. So looking at the four subcategories again, existing homes, median list price right now is right at $329,900. Existing condo townhomes, $228,000. Again, with the amount of inventory that we have in the existing condo townhomes, a year ago they were selling around $260,000, or $255,000 to $260,000. So this is really a pretty good bargain price point area as well for existing condo townhomes. One of the reasons why we're probably seeing new construction homes, single family construction homes, can't say it, but you can see it on the screen, being a little bit more sluggish is because the pricing is up. Whether that's construction cost, material cost, likely that's what's causing those to go up. But with the amount of inventory out there, home prices for new construction this past week is at 410 or 4099, and it was just a shade above $395,000 at this same time last year. So new construction is by far costing a little bit more, but again, there might be some seller incentives, some builder incentives to encourage you to make those purchases. So be sure and talk to your realtors out there and ask them to find out what the builders are offering to incentivize you to buy new construction. I'm pretty certain there's going to be some good incentives out there. New construction condo townhomes, on the other hand, again, we've seen being in a buyer's market, they're also seeing the pricing come down, trying to move that inventory. A little over 10 months inventory is not where the builders want to be with new construction condo townhomes. They want those to sell as well. So they're basically making some cost adjustments there, keeping those median list prices on new construction condos down around $290 versus over $310 last year at this time. So again, some good opportunities out there. So we can't really talk about what's going on in the market and where we're headed if we don't start looking at the number of homes going under contract each week. Now, this isn't the number of homes totally under contract. This is the number that actually went under contract week over week. So this past week, for example, we had 213 homes go under contract. That's above a year ago when we were under 200 homes going under contract. And this is a good sign. We're starting to see, as we start to see moving into the fall, we start to see sales pick up. This is exactly the chart that we're going to see that happen in when we start to see the number of pendings rise, especially year over year. In this case, we'll see those sales start to pick up, and then we'll know for sure we're in a little bit faster paced market here. Looking at the other four subcategories, we've got existing home condo sales, and it's a little bit smaller graphic because I'm going to get them both or all four of them on this same screen again, but you can see we outpaced last year week over week, and the same thing a year ago. Back in week 32 we were pretty even, and then before that we were ahead until we got around week 29 where we kind of dropped. And I think that had a little bit to do with the 4th of July holiday back in week 24 through week 27, so in vacations and things. Existing condo townhomes, 25 homes went under contract in that category. Again, outpaced a year ago at this same time by about 5 or 6 sales. New homes. This is interesting. We saw a pretty good jump just this past week. Now, I was saying, prices are a little bit higher. Inventory was just over 6 months or 7 months, I think it was. And to see new construction pending week over week, see a pretty good dramatic jump here, that's really a good sign. So we'll watch this one again next week and see if new construction continues to be, you know, getting some more pending sales in the books there. Condo townhomes, new construction actually is the only one category that missed the mark from last year. Back in week 29, I don't know what happened there, but man, there was all kinds of sales. We went from 5 a year ago to 21 or 22 on week 29, and that was a pretty good jump. Whether it must have been a new development opened or builder maybe dropped some pricing and incentivized that week. So it's truly interesting when you see those outliers to go back and try to figure out what happened there. All right, let's go to closed home sales. So year over year, we are over 200, we're plus 273 more homes closed year to date. We're at 8863. So I would anticipate by next week, we may hit that 9,000 closed sale mark. It's continued to grow. You can see from about week 13 on, we started picking up the pace and outpaced last year. We're still maintaining about 270 home sales ahead of last year. And we're trying to figure out, some other analytics that maybe would show what's causing that. And one of the things I looked at was days on market. This past week, we were 20 days on the market, which is still overall, that's still a pretty high number, because if you recall, we were, in the single digits during COVID. And then just the last 2 or 3 years, we were down around that, 12 to 14 days on market. This past week, week 34, we were at 20 days on market. And if we look at the averages, so I went back and I looked at the average year to date days on market. So from January to week 34, the average days on market is 26 days on market from year to date. And that's up 24% longer than the same time last year. So homes are selling about 25% slower, 24% slower than they were a year ago. And I know we're feeling that. Home sellers are feeling that. And that has a lot to do with maybe why our pricing is coming down as well. Looking at the 4 subcategories, we'll just kind of quickly go through these. Existing homes last week was 13 days on market. That's just the single family existing homes, 13 days on market. The overall average 19 days on market, and that's up almost 50% from a year ago. So again, you can remember we were probably closer to 10 or 11 days last year versus 19 year-to-date average. And so that's where that 46 is coming from. Existing condo townhomes, 21 days last week. Year-to-date average, 25 days on market. And that one's really up almost 80%. So we were, clearly down in the, probably close to single digits last year to see that kind of an increase there. As far as new construction home closed, 97 days on the market is what we were last week. However, the pace has been much slower overall. The average was 123, and that's up about 16% from last year. So homes are definitely feeling like they're selling a little bit slower, except for, here we go, the little engine that could. We got new construction condo townhomes, 178 days on market, yes. But the average so far this year is 158, and that's 5% faster. So we're selling fewer. But not quite as many, I should say. But there are the ones that are selling a little bit faster. So we'd like to see that trend kind of pick up in all the other 3 categories as well. So. All right, guys, that is the show. The Iowa State Fair report will come next week. I can't do that one until we go 10 days before, 10 days after the fair. And we'll hit that 10 days after here midweek this week, and I'll run all my numbers for next weekend. And we'll have a definitive answer whether or not the Iowa State Fair created a slowdown in our business. I think you remember that we don't see that happening as much of a factor as we thought it maybe did, but there's no doubt that the Iowa State Fair dragging 100,000 people out every week, every weekday and weekend does have some of an effect with business there. So next week is also the end of the month, but because it actually falls on the Sunday that I record this, we will do the Iowa State Fair show that week, and then the following week we will do the month-end report. So thank you all for joining me. I appreciate everybody's support. Let's keep the channel growing, and I am working on fixing the Des Moines Market Values website where the videos are stored. This is another reason for you to go ahead and subscribe, because then you can just get the new videos each week as they come out, and you'll be notified, as opposed to having to go to find them on the website, which is being kind of clunky right now. So that's not good for me. So anyway, let's get out there, enjoy some very, very cool this next week, and we'll talk to you all again at the end of the month, which is next Sunday. Be safe and have fun.